How do you regulate something that's never existed? That's a classic question that's technology industries have faced for many years, and now this war between government regulators, incumbents, and startups is forefront in the future of fintech. What's the right path for government regulation, and how should these fintech startups and incumbents respond to this situation? So on this issue of government regulation, the question is, when is the government going to crack down and when is it not? And obviously in China, there's been lots of crackdowns recently. Another case that's been quite interesting here in the US is this Madden versus Midland case, where the government is coming in and potentially regulating fintech lenders and saying that they can't charge above a certain interest rate. The stated goal of that is, of course, to get rid of what's called predatory lending and help consumers from getting ripped off. And the question is fintech ripping off these consumers or not? I mean, you could make an argument that fintech is coming in and helping the exact consumers that the government claims to be worried about.
Whenever you get into this government regulation issue too, then fintech, are they going to be able to find a way around this, right? And if they can't find a way around this, then do you have like tech on fintech, like fintech squared, that's going to come in and be able to figure out a way to do it. However much the government wants to regulate these things, it seems like there's always ways around these. And so it's going to be tough for the government to regulate things like bilateral transaction. If you and I agree that, okay, I'm going to lend you $10 at the beginning of the week and you want to pay $20 at the end of the week, then of course that's a massive interest rate. And yet we might be happy to do that, right? One of us may really need the money and so the other is happy to do that, and we're both better off by making that transaction. To the extent the government comes in and tries to tamp down on these, could be not so great for their citizens.
Exactly. One argument that fintech companies will make is like these markets don't exist, but they could exist at some price, and we're making consumers better off, and by creating this enormous market, society's better off.
And so then the question becomes, okay, who is most hurt by this regulation?
Exactly. Are they going to come after the big established players, or are they going to crack down on the new incumbents?
If history has told us anything, it's that these government regulators, they have jobs too. And so they want to prove that they're really doing a great job. And it's much more newsworthy to take down the big fish, right? It's much more newsworthy if you can take down that firm that everyone's heard of. And so in that sense, incumbents almost have more innovative risk in this space than a new small innovator.
They have large established brands and client bases, and to the extent that they don't want to put that at risk, they may be less willing to dive into some of these markets, and perhaps that's why some of these fintech companies have gotten market share in certain areas where the incumbents have been slow to enter, particularly in developed countries like the US.
But then you have this double-edged sword, right? If I'm late to enter into this market and there's some kind of brand equity that can be built up from a Lending Club or Prosper or one of these other people, then by the time I want to get into it, it's too late. There's a big first mover advantage. I can either try and then compete late, or I try to partner with them.
So this partnership angle is something that we've seen growing of late, the extent to which fintech companies always want to build their own brand and go public and build a huge business, but now realizing that maybe it's in their best interest to partner, and of course on the incumbent side, perhaps the same way. Like building all this expertise in-house is quite costly and difficult. It might just be easier to establish a partnership.
You've seen this in other industries too, right? We've seen this in the biotech-pharma relationship and how that's evolved over time, in that now much of the innovation in drugs has been pushed down to biotech, and now large pharma companies like a Merck or AstraZeneca simply buy the biotechs later.
And have a marketing role.
Yeah, you can imagine something similar being true here. So in that sense, what does government regulation do, and what do we need to worry most about in the fintech space with government regulation? Well, it might not be that it's going to massively impact the rate of innovation and of the technology that's developed, but it impacts who does the innovation. So the most valuable capital that you have, it turns out, is your human capital. So we want you to answer that big question. Where do you want to bet your career? Do you bet your career on that innovative new fintech startup that's going to change the world, or with the incumbent firm that's trying to get into this fintech space?